John Higgins, Mortgage One. Happy Monday. So, a little bit of good news. In fact, quite a bit of good news as we go through the slides today. Last week, the CPI number was released, although the government is shut down. The BLS did force out the September number, I think mostly to calculate the 2026 cost of living adjustment for Social Security. That number did come in a bit below consensus at 3%. So, good news there. If you really dig into the numbers, the shelter figure inside of the CPI has really been high over the last number of years, especially since COVID hit us. This particular print on CPI showed the lowest shelter cost going back to 2021. So we know the Fed wants to get down to 2% or thereabouts with regard to inflation, and we're sitting at 3%. If this shelter number continues to come down, that would really be good news for mortgage interest rates. We do have a Federal Open Market Committee meeting coming up, and it's pretty much baked in that the Fed is going to cut 25 basis points. So we'll watch and see what Federal Reserve Chairman Powell has to say after the meeting. We do know that last time that they met and they cut 25 basis points 6 weeks ago, we did break below 4% on the 10-year Treasury. And wouldn't you know it, we're still at 4% 6 weeks later. So we'll see what Chairman Powell may have to say after the 25 basis point cut. Just because the Fed is cutting rates doesn't mean our mortgage interest rates are always getting better. But if we can actually break below 4% and hold that, that would be great news for our mortgage rates. What does Freddie Mac's market survey show us? Well, we're getting closer to 6%. We're at about 6 1/8 right now. So affordability continues to get better as we head towards the end of the year. And we know that affordability is a huge issue for our buyers. And we think as rates continue to trend lower here, we're going to see a lot more first-time homebuyer action out there. And I wanted to bring out a couple programs that are specifically designed for first-time homebuyers. Fannie Mae does have a Home Ready program that does offer lower interest rates and lower mortgage insurance, but they also have a grant program that goes along with that. And for certain buyers that hit a certain average median income, depending on the census tracts, Fannie Mae may offer up to $2,500. So that's great news for our conventional buyers. MISHDA, we know, is one of the best first-time homebuyer programs here in the state of Michigan. They do offer the $10,000 down payment assistance program that covers their closing costs and down payment. You can get in for as little as 1% of the sales price. But for our buyers that have the down payment and maybe not a great credit score, MISHDA does offer a no DPA program that'll give you a 6% interest rate. So, if a buyer has a 640 credit score, putting minimal down, a conventional or an even FHA mortgage will throw off a rate much higher than 6%. So this is a great opportunity to get somebody in at a great rate. We do offer a 100% loan to value FHA program with no income restriction. This also is a 96.5% first mortgage with a down payment assistance program of either 3.5% or 5% to cover the closing costs and the down payment. So we offer lots of options for your first-time homebuyers. I always joke that the least important item for a first-time homebuyer is money for down payment, and these programs do really help out with that. So give me a call if you have any questions on these programs. Would love to help your first-time homebuyers get into a new home this year. We'll give you an update after the Fed's announcement this Wednesday. Until then, have a great week.